Intermodal transport. The seamless movement of freight utilizing multiple modes of transportation, such as ocean shipping, rail freight, and long-haul trucking, without shifting the cargo out of its container. Internal controls. The policies, safety protocols, and administrative procedures implemented by a company to ensure financial integrity, prevent fraud, and protect sensitive assets. Internal rate of return. The specific discount rate that makes the net present value of all cash flows from a particular project equal to zero, used to measure investment profitability. International Monetary Fund. An international organization that works to foster global monetary cooperation, secure financial stability, facilitate international trade, and reduce poverty by providing crisis loans to nations. Internet of Things. The expansive network of physical objects, machinery, and sensors embedded with software and connectivity to exchange data over the Internet in real time. Interoperability. The basic ability of distinct computer systems, software applications, or networks to connect, exchange data, and accurately interpret information seamlessly. Interoperability. The architecture design that enables completely different software applications, legacy systems, and external databases to connect and exchange data seamlessly. Inventory management. The systematic oversight of ordering, storing, tracking, and using a company's raw materials, components, and finished goods to balance supply and demand. Inventory turnover. A efficiency ratio indicating how many times a company sells and replaces its entire stock of inventory over a specific financial reporting period. Investor relations. A specialized corporate department that integrates finance, communication, and legal compliance to manage interactions with shareholders and the financial community. Inward processing. A customs framework allowing raw materials or components to be imported duty-free into a country, specifically to be processed, repaired, or manufactured into finished goods for export. Joint venture. A strategic business arrangement in which two or more distinct parties pool their resources to form a new entity for the purpose of achieving a specific task or project. Just in time. An inventory management strategy aimed at reducing waste and overhead by receiving goods only as they are immediately needed in the production process. Just-in-time delivery. A logistics strategy where materials and finished products are scheduled to arrive at a facility precisely when they are needed for production or assembly. Kaizen. A continuous improvement philosophy rooted in Japanese business practices that emphasizes incremental, daily changes to eliminate waste and optimize operational excellence. Kanban. A visual project management and workflow system that utilizes physical or digital cards to manage task progression, balance capacity, and prevent operational bottlenecks. Key performance indicators. Quantifiable metrics used by organizations to evaluate their success in reaching critical operational and strategic goals. Know your customer. A mandatory compliance process where financial institutions must verify the true identity, address, and legal status of their clients before opening accounts. Knowledge sharing. The organized practice of exchanging insights, training materials, skills, and institutional expertise across different teams within an enterprise. Labor-intensive. A term describing industries or business processes, such as hospitality or manual agriculture, where the primary cost and operational requirement is human workforce hours. Last mile delivery. The critical, final leg of the logistics process where a parcel is transported from a local distribution hub directly to the customer's doorstep. Last mile optimization. The strategic refinement of the final leg of logistics delivery to reduce shipping costs, decrease transit times, and boost customer satisfaction scores. Lead time. The total latency period between the initiation of a business process or order and its final completion or delivery. Leadership. The ability of an individual or team to guide, influence, and inspire others to achieve organizational goals and navigate strategic initiatives. Lean manufacturing. A production methodology focused strictly on minimizing waste, optimizing workflows, and maximizing value for the customer without sacrificing product quality. Legacy systems. Outdated computer software, hardware, or operational technologies that remain critical to daily operations but lack compatibility with modern digital ecosystems. Legal counsel. Professional attorneys or in-house lawyers who provide an organization with expert legal advice, contract drafting, regulatory guidance, and courtroom representation. Legal framework. The overarching system of codified laws, judicial precedents, and regulatory statutes that govern business conduct and contractual obligations within a jurisdiction. Less than truckload. A shipping category used for relatively small freight loads that do not fill an entire semi-truck trailer, allowing multiple shippers to share space and costs. Letter of credit. A legally binding financial document issued by a bank guaranteeing that a buyer's payment to a seller will be received on time and for the correct amount. Leverage. The strategic use of existing resources, assets, capital, or competitive advantages to multiply outcomes or achieve a disproportionate business impact. Liability. The legal and financial responsibility of an individual or corporate entity for its actions, debts, obligations, or damages caused to another party. Lifetime value. A predictive metric calculating the total net profit or revenue a business can expect to earn from a single customer throughout their entire relationship. Linguistic nuance. Subtle differences in word choice, tone, and cultural context that can significantly alter the meaning and impact of business communication. Liquidity. The ease and speed with which an asset, security, or commodity can be converted into cash in the market without causing a significant shift in its price. Liquidity coverage ratio. A strict prudential regulation requiring financial institutions to hold a sufficient buffer of highly liquid, unencumbered assets to survive a 30-day severe stress scenario. List management. The systematic updates, maintenance, and synchronization of regulatory watch lists, sanctions lists, and internal compliance rosters to ensure audit accuracy. Litigation. The formal process of taking a legal dispute through the public court system to obtain a binding judgment from a judge or jury. Localization. The deliberate process of adapting a product, service, marketing campaign, or corporate policy to match the specific linguistic, cultural, and legal needs of a local market. Logistics hub. A centralized geographic location or industrial facility specifically designed for the storage, consolidation, sorting, and rapid distribution of freight and cargo. Long-term value creation. A strategic business approach focused on building sustainable, enduring corporate growth, strong brand equity, and consistent financial returns over multiple decades rather than focusing purely on short-term quarterly profits. Machine learning. a specialized subset of artificial intelligence focused on building algorithms that use data to learn patterns and automatically improve their performance over time. Macroprudential policy, a regulatory strategy focused on monitoring and mitigating systemic risks across an entire financial system to prevent widespread economic instability. Management consulting, the practice of helping senior executives improve overall organizational performance through the analysis of existing business problems and development of future growth plans. Maritime shipping, the global logistics practice of transporting heavy, large volume cargo and intermodal containers across oceans via specialized cargo ships. Market capitalization, the total dollar market value of a company's outstanding shares of stock, calculated by multiplying a company's total shares by the current share price. Market dynamics, the underlying forces, such as supply, demand, competitor behaviors, and economic shifts, that influence pricing and market trends within an industry. Market expansion, a strategic growth initiative where a business introduces its existing products or services to completely new geographic regions or customer demographics. Market penetration, the strategic expansion of a product or service's market share within an existing consumer segment through aggressive marketing or competitive pricing. Master service agreement, a comprehensive, foundational contract that outlines the general terms, payment frameworks, and liabilities governing all future transactions and projects between two parties. Material handling, the short-distance movement, protection, storage, and control of materials and products throughout the manufacturing and warehousing process. Material information, any critical corporate update, financial data, or strategic event that could reasonably influence an investor's decision to buy, sell, or hold a company's stock. Mature markets, well-established economic regions or industries characterized by stable, slower growth rates, fierce competition, and highly consolidated market share among top firms. Media relations, the specialized subset of public relations focused entirely on coordinating, communicating, and managing interactions with journalists, editors, and news outlets. Mediation, a voluntary, structured dispute resolution process where a neutral facilitator helps conflicting parties negotiate an amicable settlement without going to court. Mentorship, a professional relationship in which an experienced, trusted individual guides, advises, and supports a less experienced colleague's career growth. Mergers, the strategic combination of two existing corporate entities into one entirely new, single operational and legal business organization. Microfinance, a category of financial services, including microloans and basic savings accounts, targeted at low-income individuals and entrepreneurs who lack access to traditional banking. Microprudential supervision, the detailed oversight and regulation of individual financial institutions to ensure the safety, compliance, and soundness of each specific firm. Milestone, a significant, marker event or achievement within a project timeline used to gauge progress toward final delivery. Milk run, a highly coordinated logistics routing strategy where a single delivery vehicle makes regular, recurring stops to collect cargo from multiple suppliers on a single trip. Mitigation strategy, a formalized plan of action designed to eliminate, reduce, or manage the negative impact of identified risks on business operations. Monetary policy, The macroeconomic strategy managed by a nation's central bank involving the regulation of money, supply and interest rates to control inflation and foster economic stability. Nearshore sourcing. The procurement strategy of purchasing raw materials, components, or professional services from suppliers located in geographically close countries. Nearshoring. The business practice of outsourcing operational processes or manufacturing to a company located in a nearby country, typically sharing a similar time zone and cultural proximity. Negotiation. A strategic discussion between parties aimed at resolving a dispute, reaching an agreement, or settling terms of a business transaction. Net present value. A financial calculation used to determine the current value of a stream of future cash flows generated by an investment, minus the initial capital cost. Net Promoter Score. A standard management tool used to gauge customer loyalty and brand advocacy by asking clients how likely they are to recommend the company to others. Non-disclosure agreement. A legally binding contract governing the sharing of confidential information, requiring the signing parties to maintain strict secrecy regarding shared material. Non-governmental organization. A non-profit, citizen-based group that functions independently of government influence to address humanitarian, social, or environmental issues. North Star metric. The key performance indicator that best captures the core value an organization delivers to its customers and acts as a central guide for long-term growth. Obsolescence. The state of an asset, piece of technology, or inventory stock becoming outdated, unusable, or unmarketable due to technological advancements or shifting consumer demands. Offsetting. The practice of compensating for carbon emissions by funding external environmental projects, such as reforestation or clean energy programs, that reduce greenhouse gases elsewhere. Offshoring. The operational practice of relocating a business process, manufacturing plant, or service center to a foreign country to reduce labor or operational expenses. Omni-channel. An integrated, multi-channel approach to sales and marketing that provides customers with a seamless, consistent shopping experience across physical and digital storefronts. Onboarding. The structured process of integrating a newly hired employee into an organization, introducing them to its culture, tools, compliance rules, and specific role requirements. Open account. A trade arrangement where goods are shipped and delivered before payment is due, typically resulting in a high degree of credit risk for the seller. Operational consulting. An advisory discipline focused on analyzing and optimization a company's internal workflows, supply chains, manufacturing processes, and resource allocation to cut waste. Operational efficiency. The capability of an enterprise to deliver high-quality products or services using the fewest possible resources, minimizing waste and costs. Operational excellence. A corporate culture and leadership philosophy that focuses on continuous improvement, risk mitigation, and maximizing execution efficiency across the enterprise. Optimization. The practice of making a system, process, or design as fully perfect, functional, and effective as possible within given operational constraints. Optimization. The continuous refinement of technical code, system resource allocation, or process maps to achieve peak operational performance and efficiency. Organizational culture. The shared collection of values, beliefs, attitudes, behavioral standards, and unspoken rules that characterize how an enterprise's members interact and work. Outsourcing. The strategic practice of hiring an external third-party company or individual to perform services or create goods that were traditionally handled internally. Outward processing. A trade mechanism allowing domestic goods to be temporarily exported to a foreign country for processing or alteration and subsequently re-imported with partial duty relief. Overhead costs. The ongoing administrative and operational business expenses required to run an enterprise that cannot be directly linked to a specific product or service. Packing list. A detailed shipping document that accompanies an international cargo load, itemizing the precise weight, dimensions, and contents of each individual container or carton. Paradigm shift. A fundamental and radical change in approach, underlying assumptions, or industry standards that alters how an entire business ecosystem operates. Patent. A government authority or license conferring a right or title for a set period, especially the sole right to exclude others from making, using, or selling an invention. Payback period. The exact length of time required for a business venture or capital investment to generate enough cash flow to fully recover its initial cost. Payment gateway. A secure merchant service and software application that authorizes credit card processing and electronic payments for e-commerce and physical retail stores. Performance review. A formal, periodic evaluation where a manager assesses an employee's work achievements, behaviors, strengths, and alignment with organizational goals. Performance scorecard. A strategic management tool used to track, quantify, and grade a supplier's or internal team's performance against predefined operational metrics. Perishable goods. Commercial products, such as fresh food, dairy items, and medical vaccines, that have a limited shelf life and degrade rapidly if not kept in cold storage. Permanent establishment. A fixed, continuous place of business or operational presence within a foreign country that triggers corporate tax liabilities under local laws. Pitch deck. A concise, visually engaging presentation used by entrepreneurs or executives to provide an overview of a business model, product, or investment opportunity. Pivot. A deliberate, strategic shift in a company's business model, product line, or target market to adapt to new industry realities or customer demands. Politically exposed persons. Individuals who hold prominent public or government positions, making them inherently higher risk for potential involvement in bribery and corruption. Port congestion. A disruptive logistics bottleneck occurring when cargo vessels experience significant delays, waiting to dock, unload, or clear customs at a major maritime port. Portfolio diversification. The practice of spreading investments across various assets, industries, or products to reduce financial risk and stabilize overall returns. Portfolio investment. The acquisition of passive international financial assets, such as stocks, bonds, or mutual funds, without gaining direct operational control over the underlying enterprise. Portfolio management. The art and science of selecting and overseeing a collection of investments that match the long-term financial objectives and risk tolerance of a client or institution. Positioning. The strategic process of shaping how a brand, product, or service is perceived in the minds of target consumers relative to competitive offerings. Post-merger integration. The complex, multi-stage process of unifying two distinct corporate entities' operations, cultures, software systems, and personnel following a completed transaction. Predictive maintenance. a proactive maintenance technique that utilizes Internet of Things data and machine learning to forecast precisely when an industrial machine is likely to fail. Press release. An official written or recorded statement sent directly to members of the news media to provide specific, timely information regarding a corporate announcement. Process mapping. The visual workflow technique of creating a detailed flowchart to document every step of a business process from start to finish for analysis. Procurement. The comprehensive act of acquiring goods, services, or works from an external source, encompassing the entire negotiation and purchasing workflow. Procurement. The strategic acquisition of goods, services, or assets that match a company's operational requirements through competitive vetting and negotiation. Procurement strategy. A comprehensive long-term plan detailing how an organization will source critical goods, manage vendor relationships, and optimize its purchasing budget. Productivity tools. Software applications, digital dashboards, and platforms explicitly designed to streamline task management, optimize collaboration, and enhance operational efficiency. Professional development. The continuous process of acquiring new skills, credentials, and knowledge to foster career advancement and enhance on-the-job effectiveness. Professional success. The achievement of desired career goals, milestones, and advancement within one's chosen field through skill, effort, and strategic navigation. Profit margin. A foundational financial metric expressing a company's net or gross earnings as a percentage of its total revenue, indicating pricing efficiency. Prospectus. A legally mandated formal document that provides detailed information about a company's financial health, operations, and risks to prospective investors before an offering. Protectionism. An economic policy of restricting imports from other nations through tariffs and regulations to safeguard domestic industries and local workers from foreign competition. Protocol. A standardized, formal set of rules and instructions that govern how data is transmitted, processed, and validated between different devices or networks. Proxy voting. A formal mechanism allowing shareholders to delegate their voting rights to a designated representative or ballot to cast votes on corporate decisions in their absence. Prudential regulation. A type of financial regulation requiring financial institutions to maintain adequate capital reserves, manage risks cautiously, and protect consumer deposits. Public relations. The strategic communication process utilized by an enterprise to build, manage, and maintain positive relationships with the media, community, and general public. Public-private partnership. A collaborative, long-term agreement between a government agency and a private sector enterprise to fund, build, and operate public infrastructure projects. Quality assurance. The systematic monitoring and evaluation of various aspects of a project, service, or facility to maximize the probability that standards of quality are met. Quality circles. Voluntary groups of workers who meet regularly to discuss operational problems, analyze workflows, and devise solutions to improve quality and productivity. Quality control. The operational process of testing, reviewing, and verifying that finished products or services meet required performance and safety standards before release. Quarterly earnings. A public company's regular financial release summarizing its revenues, net income, operational metrics, and general business performance for a 3-month period. Rail freight. The cost-efficient, land-based transportation of heavy commodities, bulk materials, and intermodal containers via commercial train networks over long distances. Real-time tracking. The continuous, live monitoring of the geographic location and status of shipments, assets, or inventory utilizing GPS, telematics, and digital dashboards. Regional trade agreement. A treaty signed between multiple countries within a specific geographic area to reduce tariffs, eliminate trade barriers, and foster deeper economic integration. RegTech. A specialized subset of financial technology that focuses explicitly on utilizing software to help corporations meet regulatory compliance standards efficiently and cost-effectively. Regulatory compliance. The strict adherence of a company to external laws, legal mandates, safety guidelines, and operational standards set by local and international authorities. Regulatory framework. The comprehensive system of laws, rules, and guidelines established by governing bodies to oversee and manage corporate conduct within an industry. Regulatory penalty. A formal fine, operational restriction, or legal sanction imposed on a corporation by a government authority for violating established rules or laws. Regulatory reporting. The mandatory submission of structured financial data, compliance metrics, and operational risk assessments to governing authorities according to strict timelines. Regulatory sandbox. A controlled, safe environment supervised by a regulatory authority that allows fintech startups to test innovative financial products with real consumers on a limited scale. Regulatory standard. A mandatory rule, specification, or legal threshold established by an authoritative governing body that businesses within that industry must obey. Remittances. A transfer of money by a foreign worker or expatriate to an individual or family member living back in their home country. Remote workforce. A decentralized staffing model where employees perform their daily professional tasks from locations outside of a centralized physical corporate office. Renewable energy. Clean energy generated from natural resources that naturally replenish themselves over time, such as solar power, wind power, and geothermal energy. Reorder point. The specific inventory level at which a company must place a new procurement order for raw materials or products to prevent a stockout event. Reputation management. The practice of monitoring, influencing, and protecting the public perception, digital sentiment, and overall brand image of a company or individual. Reshoring. The strategic process of bringing domestic manufacturing, production, or corporate service operations back to a company's home country from overseas. Resilience. The capacity of an enterprise to absorb systemic shocks, adapt to disruptive events, and maintain or rapidly recover core business operations. Resource allocation. The strategic distribution and scheduling of available assets, human talent, and financial capital to various tasks or projects within an enterprise. Resource optimization. The strategic management and efficient allocation of an organization's assets, time, and human capital to maximize productivity and value delivery. Retail investors. Individual, non-professional investors who buy and sell securities, mutual funds, or digital assets through personal brokerage accounts for personal wealth growth. Retention. The ability of a company to maintain long-term relationships with its existing customers and prevent them from switching to competitors over a given period. Retrospective. A structured meeting held at the conclusion of a project or sprint where a team reviews their performance, analyzes successes, and identifies process improvements. Return on investment. A foundational performance metric used to evaluate the efficiency and profitability of an investment by dividing net profit by the initial cost. Revenue streams. The various sources and channels from which a business earns money by selling goods, services, or assets to its target market. Reverse logistics. The operations associated with the return, recycling, refurbishment, or disposal of products and materials moving backward through the supply chain. Risk assessment. The systematic process of identifying, analyzing, and evaluating potential hazards, operational threats, or financial vulnerabilities that could harm an enterprise. Risk mitigation. The systematic process of developing options and taking actions to reduce threats and vulnerabilities to an organization's projects or operations. Risk tolerance. The degree of variability and financial uncertainty in investment returns that an individual or institutional investor is willing and able to withstand. Risk-based approach. A compliance strategy where an organization allocates its risk assessment and auditing resources primarily to the operational areas displaying the highest potential vulnerabilities. Road transport. The flexible logistics practice of moving goods, parcels, and freight via trucks and commercial vehicles over public highway systems directly to final destinations. Roadmap. A high-level visual strategic plan that outlines the goals, milestones, major deliverables, and timeline of a product or business initiative. Robotics. The branch of technology and engineering focused on building automated, programmable machines to perform complex or repetitive physical tasks with high precision. Route optimization. The strategic practice of utilizing mathematical algorithms and GPS tracking data to determine the most cost-efficient and fastest delivery paths for commercial vehicles. Rules of origin. The specific criteria used by customs officials to determine the national source of a product for the application of tariffs, free trade benefits, and quotas. Safety regulations. The comprehensive collection of laws, occupational guidelines, and operational protocols designed to protect workers and consumers from workplace hazards and accidents. Safety stock. The additional volume of inventory maintained by a business in its warehouse to act as a buffer against unexpected surges in demand or lead time delays. Sanctions. Geopolitical penalties, trade embargoes, or financial restrictions imposed by one or more nations against a target country, corporate entity, or individual to influence behavior. Sanctions screening. The automated compliance procedure of checking individuals, businesses, and transactions against international government blacklists and trade sanctions. Saturation. A market condition that occurs when a product or service has been fully adopted by its maximum potential customer base, limiting future organic growth. Scalability. The capability of a system, business model, or network to expand and manage increased volume and demand without sacrificing performance or efficiency. Scalability. The internal capacity of a technical network, software system, or business infrastructure to process significantly higher volumes of data or transactions without crashing. Scalable solution. An architecture, software system, or business model designed to expand its capacity smoothly and handle growing workloads without performance degradation. Scope creep. The gradual, unauthorized expansion of a project's requirements, features, or deliverables beyond the originally agreed upon boundaries defined in the statement of work. Scrum Master. A specialized facilitator and agile professional who guides a project team, removes operational roadblocks, and ensures adherence to Scrum framework principles. See Waybill. A non-negotiable transport document used in maritime shipping that serves as a receipt of goods and evidence of the contract of carriage without requiring physical presentation for cargo release. Segmentation. The practice of dividing a broad consumer or business market into subgroups based on shared characteristics, behaviors, or demographic profiles. Service level agreement. A formal contract between a service provider and a client that explicitly defines the expected quality, availability, and responsibilities of the service. Shareholder activism. A powerful practice where equity owners utilize their voting rights and public influence to pressure a corporation's executive management team into making strategic or operational changes. Shareholder value. The financial return and capital appreciation delivered to equity owners based on the strategic decisions and profitability of a corporation. Shelf life. The total length of time that a perishable commodity or consumer good remains usable, safe, and fit for sale under standard storage conditions. Shipping lane. A regular, heavily trafficked maritime route or geographical path utilized by commercial cargo vessels to move goods across oceans. Shrinkage. The loss of inventory that can be attributed to factors such as employee theft, shoplifting, administrative errors, or damage during material handling. Silo mitigation. The strategic effort to break down isolated departmental structures to improve collaboration, communication, and data sharing across an organization. Six Sigma. A highly disciplined, data-driven methodology and process improvement framework focused on eliminating defects and minimizing variability in manufacturing and business workflows. Smart contracts. Self-executing digital contracts with the terms of the agreement between buyer and seller directly written into lines of cryptographic computer code. Smart warehousing. A modern distribution facility that integrates automation, robotics, artificial intelligence, and Internet of Things sensors to manage inventory with minimal human error. Social impact. The distinct, tangible effect that an enterprise's intentional programs, corporate policies, and investments have on the well-being of the local community and society. Social responsibility. An ethical framework suggesting that an enterprise has an obligation to act in ways that benefit and uplift the broader community and society at large. Sourcing. The strategic process of identifying, evaluating, and selecting suppliers to provide the goods and services necessary to run a business. Sovereign default. A severe economic event occurring when a national government fails to meet its legal obligations to pay back interest or principal on its national debt. Sovereign wealth fund. A state-owned, government-controlled investment fund composed of national capital reserves generated from budgetary surpluses or commodity exports. Special economic zone. A dedicated economic region within a nation that features business and trade laws distinct from the country's standard regulations to attract foreign direct investment. Specification. A detailed, precise description of the technical requirements, dimensions, materials, and quality criteria for a product, project, or service. Speculation. The financial practice of engaging in high-risk asset trades with the expectation of making quick, significant profits from short-term market price movements. Spend analysis. The systematic review and evaluation of an organization's historical purchasing data to identify cost-saving opportunities and streamline procurement strategies. Spot market. A public financial market where commodities, currencies, or securities are traded for immediate delivery and cash settlement rather than future fulfillment. Sprint planning. A recurring, collaborative team event in agile development where the scope, goals, and specific tasks for an upcoming short working block are defined. Stakeholder briefing. A targeted, concise meeting or documentation package designed to update key investors, board members, or partners on critical project milestones or strategic shifts. Stakeholder capitalism. A corporate leadership philosophy asserting that an enterprise must optimize value and outcomes for all its stakeholders, including employees, suppliers, and communities, not just its shareholders. Stakeholder management. The practice of building relationships, managing expectations, and aligning communication with individuals who are impacted by or invested in a project's outcome. Stakeholders. Individuals, groups, or organizations that have a direct interest, investment, or involvement in the outcomes and decisions of a business. Standard operating procedure. A set of step-by-step instructions compiled by an organization to help workers carry out complex, routine operations efficiently and uniformly. Statement of work. A formal project management document that defines the specific scope, deliverables, timelines, milestones, and costs associated with a vendor contract. Stock exchange. A centralized, regulated marketplace where public company shares, bonds, and other financial securities are systematically bought and sold by traders. Stockout. A supply chain failure that occurs when an item is completely exhausted from inventory, leading to unfulfilled customer orders and lost sales revenue. Strategic advising. High-level executive consulting focused on helping an organization define its long-term direction, corporate alignment, competitive positioning, and growth goals. Strategic alliance. An agreement between two or more independent companies to cooperate in a mutually beneficial project while retaining their separate corporate identities. Strategic sourcing. An advanced procurement process that continuously analyzes a company's spending patterns, market dynamics, and supplier capabilities to build long-term value partnerships. Stress testing. A simulation technique utilized by financial institutions and regulators to evaluate how a corporation or economic system would perform under extreme, adverse economic scenarios. Structural adjustment. A set of economic policy reforms, involving fiscal discipline and market deregulation, required by international financial institutions as a condition for receiving development loans. Succession planning. The strategic human resources process of identifying and developing high-potential internal candidates to fill critical leadership roles when current executives depart. Supervisory framework. The comprehensive system of principles, operational rules, and metrics utilized by a regulatory authority to oversee corporate compliance within an industry. Supplier diversity. A deliberate procurement policy that encourages an enterprise to source goods and services from historically underrepresented or minority-owned business entities. Supplier relationship management. The systematic, Data-driven management of vendor interactions to assess performance scorecards, cultivate collaboration, and reduce transactional risks. Supply chain. The entire interconnected network of entities, resources, activities, and technologies involved in the creation and sale of a product. Supply chain ethics. The systematic management of corporate sourcing and logistics to ensure that all suppliers adhere to strict human rights, environmental laws, and safety regulations. Supply chain resilience. The capacity of an organization's logistical network to anticipate, quickly adapt to, and rapidly recover from unexpected disruptions or global crises. Supply chain visibility. The capability of an organization to accurately track individual components, raw materials, and finished goods at every stage of their journey from vendor to customer. Subtech. The specialized applications of innovative technology, data analytics, and automation by financial supervisory authorities to monitor and regulate financial systems. Suspicious Activity Report. An official document that financial institutions must file with regulatory compliance authorities when they detect transaction patterns that suggest illegal behavior. Sustainability. The business practice of operating without negatively impacting the environment, community, or society at large, ensuring resources remain available for the future. Sustainability Accounting Standards Board. An independent organization that establishes industry-specific standards to guide businesses in disclosing financially material environmental, social, and governance information to investors. Sustainability reporting. The transparent public disclosure of an organization's environmental, social, and corporate governance performance and metrics to stakeholders. Sustainable finance. The deliberate integration of environmental, social, and governance (ESG) criteria into corporate investment decisions, asset management, and banking practices to foster long-term value. Synchronous communication. Real-time, immediate verbal or written dialogue between individuals or groups, such as live video conferences, phone calls, or instant messaging. Synergistic. Characterized by the interaction of two or more agents, forces, or departments to produce a combined effect greater than the sum of their separate parts. Synergy capture. The actual realization of financial savings, increased efficiencies, and shared value achieved by combining two corporate entities. Systemic risk. The potential risk that the failure of a single financial institution or business entity could trigger a cascading collapse across an entire industry or national economy. Talent retention. The strategic policies, benefits, and workplace practices designed by an organization to keep its top-performing employees from leaving the company. Tariff rate quota. A trade policy mechanism combining protective tariffs and import quotas, where a low duty is applied to a specific volume of imports, and a much higher rate is applied to excess volume. Tariffs. Taxes, duties, or levies imposed by a government on imported or exported goods, often used to protect domestic industries or generate revenue. Task Force on Climate-Related Financial Disclosures. A highly respected framework designed to guide corporations in providing consistent, climate-related financial risk disclosures to lenders, insurers, and public investors. Tax compliance. The continuous operational process of ensuring that an enterprise accurately calculates, reports, and files its corporate taxes in accordance with federal and local legal frameworks. Tax optimization. The legal application of financial frameworks, tax laws, and corporate structuring to minimize an enterprise's overall corporate tax liabilities. Telematics. The integrated use of telecommunications and informatics to monitor vehicle locations, driver behaviors, and mechanical diagnostics across a logistics fleet in real time. Third-party logistics. The outsourcing of e-commerce, warehousing, fulfillment, and distribution operations to an external specialist provider. Throughput. The total amount of material, data, or product that a system can process and deliver within a specified period of time. Timeline. A chronological arrangement of events, tasks, and deadlines that maps out the progression and expected completion of a project or strategy. Tokenization. The security process of converting ownership rights to a real-world physical asset or financial security into a digital token on a blockchain network. Total quality management. A comprehensive, organization-wide management approach focused on continuous process improvement and long-term customer satisfaction through high quality touchpoints. Any point of interaction or communication between a consumer and a business, spanning marketing, the sales process, and customer service. Traceability. The ability to verify, track, and follow the history, application, or location of an item or component throughout its entire life cycle or supply chain. Trade barriers. Government-imposed restrictions, such as tariffs, quotas, or strict regulations, designed to limit or control the import of foreign goods into a domestic market. Trade compliance. The thorough process of ensuring that all international imports and exports conform precisely to the strict trade laws, customs valuation rules, and sanctions of involved nations. Trade dispute. A formal economic disagreement between two or more countries regarding the implementation of tariffs, trade barriers, or alleged violations of free trade agreements. Trade embargo. An extreme trade barrier consisting of a complete prohibition of commerce, shipping, and economic exchange with a specific target nation. Trade facilitation. The simplification, harmonization, and modernization of international import and export procedures to reduce lead times and logistics costs for global businesses. Trade finance. The specialized financial instruments, credits, and insurance products utilized by corporations to facilitate international trade transactions and manage payment risks. Trade secret. Confidential business information, formulas, patterns, or compiled data that provides an enterprise with a distinct competitive advantage over market rivals who do not know it. Trademark. A recognizable sign, design, phrase, or logo that legally identifies and distinguishes a specific company's products or services from those of its competitors. Transaction monitoring. The automated process of analyzing live financial transactions to detect unusual spikes, anomalies, or suspicious behaviors that indicate potential money laundering. Transaction speed. The total time required for a financial payment or digital data transfer to be initiated, verified, and successfully settled within a system. Transfer pricing. The internal accounting pricing rules and methods used to value transactions and asset transfers between distinct subsidiaries belonging to the same multinational corporation. Transit time. The total duration of time required for a shipment or cargo delivery to travel from its initial point of origin to its final destination hub. Transparency. The open, honest disclosure of a company's practices, financial metrics, and operational insights to stakeholders and the general public. Underwriting. The financial process through which an investment bank assesses risk and guarantees capital to an issuing corporation by purchasing its new securities before public distribution. Unemployment rate. The percentage of the total active labor force that is currently without work but actively seeking professional employment within an economy. Upstream. The early stages of a supply chain or production process focused on raw material extraction, sourcing, and initial manufacturing steps. User experience. The comprehensive perception, emotional response, and ease of interaction a customer experiences when navigating a company's website, application, or product. Utilization rate. A key metric measuring the percentage of an employee's or asset's total available working time that is spent on direct, revenue-generating tasks. Value-added tax. An consumption tax assessed on a product at each individual stage of production, distribution, or sale, based on the value added at that specific step. Value delivery. The overarching operational process through which a company ensures its target customers actually receive the benefits promised in its value proposition. Value proposition. A clear statement explaining how a company's product or service solves a customer's problem, delivers distinct benefits, and outperforms competitors. Variable costs. Corporate expenses that fluctuate in direct proportion to the volume of goods or services an enterprise produces or sells. Velocity. A metric used in agile frameworks to measure the average amount of work or story points a development team successfully completes during a standard sprint. Vendor evaluation. The formal, data-driven process of assessing potential or current suppliers based on their quality, reliability, pricing, and compliance with corporate standards. Vendor-managed inventory. An inventory management model where the supplier assumes full responsibility for monitoring and maintaining optimal stock levels at the buyer's warehouse. Vendor management. The corporate process of establishing, monitoring, and evaluating relationships with third-party suppliers to ensure cost efficiency and quality. Delivery. Venture capital. A form of private equity financing provided by investors to startups and small businesses that demonstrate high long-term growth potential. Venture philanthropy. An approach to charitable giving that applies private equity and venture capital principles, such as long-term financing and operational support, to nonprofit organizations. Volatility. A statistical measure of the dispersion of returns for a given security or market index, characterized by rapid, unpredictable price fluctuations over time. Warehouse management system. A specialized software application designed to optimize, track, and manage the daily operational workflows of a distribution center, from receiving to fulfillment. Warehousing. The commercial practice of securely storing goods, materials, and inventory within a dedicated facility before they are distributed or sold. Waste reduction. The systematic practice of optimizing production processes, materials sourcing, and packaging to minimize the volume of garbage and hazardous waste generated by a firm. Wealth management. An advanced professional service that combines financial planning, investment advisory, tax optimization, and legal advice to protect and grow high net worth individuals' capital. Whistleblower policy. A structured corporate safety framework that protects employees from professional retaliation when they report illegal, unethical, or fraudulent activities within the firm. Workflow optimization. The strategic practice of analyzing, refining, and streamlining an internal business process to eliminate redundancies, reduce costs, and accelerate completion times. Workforce management. An integrated set of human resource processes aimed at optimizing staff schedules, forecasting labor demands, tracking time, and maximizing overall productivity. World Bank. An international financial institution that provides development loans, grants, and technical assistance to middle and low-income countries to fund capital-intensive infrastructure projects. World Trade Organization. The global international organization that sets and enforces the rules, legal frameworks, and dispute mechanisms governing international trade between nations. 1. Strategic alignment. The process of linking an organization's structure, resources, and day-to-day operations directly to its overarching business strategy to ensure every team is working toward the same long-term goals.